Loop Capital is feeling cautious optimism towards Dick's Sporting Goods, initiating the retailer with a hold rating and a $130 price target, and touting its consistent positive free cash flow, but still awaits a more attractive entry point. The man behind that call, friend of the show, Anthony Chukumba, Loop Capital Markets Managing Director. Anthony, it's great to see you. I got to tell you, Brian Sazzi and I have been talking about Dick's Sporting Goods because we each have had experiences as of late where we go into a Dick's, great space, lots of cool merchandise, and like crickets in terms of trying to get help on the floor of the store. So I'm going to start there instead of specifically on your call in terms of what you think about the staffing and customer service at Dick's right now.
I'm a little surprised by that because one of the things we really like about Dick's is that they do have superior customer service. I mean, part of that is the elevated footwear, departments. Part of that is the fact they own Golf Galaxy, the largest golf retailer in the U.S. And so, so they definitely have some pretty good customer service in that department, as well as, with Golf Galaxy, a lot of the stores have golf simulators and putting greens. So I'm a little surprised. That might be a little bit of one-off experiences, or maybe they just don't like you and Brian. I don't know.
Could be.
End of sentence.
I don't know. I was with my kid. We were trying to get some help on in the baseball section, but maybe.
Anthony, well, it's clear.
I don't know, but Anthony, they might not like size.
Anthony, it's clear all Dick's has to do is put a Bed Bath & Beyond in the store and all their problems will be solved. No, look, we'll get to that in a second. But my real question here is, what is the inventory situation at Dick's Sporting Goods? How much inventory are they sitting on? Is it a big risk to profits and cash flow over the next couple quarters?
They don't really seem to have any inventory issues, at least that I'm aware of at this time. I mean, they weren't one of the retailers who had way too much inventory early last year and had to kind of work through it. So I think their inventory position is perfectly fine. I mean, if anything, look, one advantage that Dick's has a lot of relative to a lot of other sporting goods retailers is that they have this very, very close relationship with Nike, and they're getting a lot of, sort of exclusive, Nike product that you can really only get from Nike.com. So I don't think that inventory is a real issue for Dick's right now.
You know what? You mentioned Golf Galaxy. I'm going to bite on that because Tiger Woods is back. He's playing this weekend, and everybody's excited. So I need to ask for Golf Galaxy within Dick's, what type of growth do you need to see within that brand specifically? And does it have its own standalone power if Dick's would decide to say, spin it off one day?
Well, remember, that would be counter to the fact that they bought Golf Galaxy, right? I mean, look, Golf Galaxy's been great for Dick's, less as a standalone concept and more bringing that product into Dick's stores and making Dick's sort of the go-to store for golf equipment. So, yeah, I mean, Dick's has about 730 of their core Dick's stores. They've got 130 or so different specialty stores, and Golf Galaxy is one of them. But I think to a large extent, one of the things that they've been really good at doing is testing different, initiatives in these specialty stores, and the ones that work, integrating those into the core Dick's store. And I think it's really kind of an 80-20 rule where they're getting the vast majority of their sales and the profits from the core Dick's stores.
Hey, Anthony, what do you think is going to unlock the next phase then? If you think that your scenario is priced in here, I guess one of two things have to happen. Either the stock's going to have to go down for some reason, and then it would become more attractive, or something else is going to come to, help it higher, help drive a little more growth. Which do you think is going to happen?
So quite frankly, I mean, look, part of the reason that I'm at a hold rating is that I have a hard time seeing what that next catalyst would be, right? And if I don't really have visibility in terms of that next catalyst, then yeah, I sort of have to wait for the former, right? I have to wait for that pullback in the stock price. I mean, look, the stock's not terribly expensive relative to a lot of other stocks that I cover, but it is trading at about 11 times my 2023 EPS estimate, and the average over the last few years has been more like 9.5 times. The other thing, and look, it's a little bit unfair to Dick's, but it is what it is. I can't help but compare them to Academy Sports. Academy Sports trades at a 3-turn multiple discount to Dick's, and I think Academy Sports just has better square footage growth prospects. I mean, one of the concerns I have with Dick's is that core Dick's concept is pretty much saturated in the U.S. They've got about, like I said, 700 or so stores. Academy's got less than 300.
Anthony, one company that has no earnings, of course, is Bed Bath & Beyond. We have a rolling blog with this on you. How in the world did they get close to $1 billion in money, and does that keep them in business?
Yeah, those are great questions, Brian. So first off, let's not get it twisted. They didn't get $1 billion, right? They got 200 or so. They have an option to get another 700, 800. They have to jump through a bunch of different hoops to do that. Look, when I first saw this news, I was really scratching my head, particularly given the fact that I know the, sort of lead investor pretty well, and they're very, very smart money. But then once I started to peel the onion, I'm like, oh, okay, yeah, this makes sense. I mean, essentially, without going into all the specifics, because I don't want to bore your audience, the way that this works is that they issued this preferred stock, but the preferred stock is convertible to common stock pretty much at any time at a discount to the stock price, regardless of where the stock price is. So in other words, if the stock's at $2, then it's a discount to that. If the stock's at $1, it's a discount to that, all the way down to like about 70 cents. And as far as I can tell, there's really no restrictions in terms of selling the stock. So in other words, at any time you can convert your preferred into common stock, you get that common stock at a discount to the current stock price, and then you can sell that stock at any time. It's like a license to print money. I mean, it's literally heads I win, tails you lose.
So, go ahead.
Yeah.
I'll just say, Anthony, well, how does that, is that good for Bed Bath longer term? I mean, do they make it to next year?
So, look, desperate times call for desperate measures, right? I mean, they were on the verge of going bankrupt, and now they got this $200 or so million, and maybe there's more behind it. But given how fast they're burning through cash, I think this just, all it did was forestall the inevitable.
Anthony, just want to come back to something you mentioned here, because it actually got the wheels turning a little bit on Golf Galaxy, and really just giving away my golf fandom at this point. But when you think about the fact that they do have all of these add-on locations, and as you were mentioning, it sounds like much of the sales in that category are still going through Dick's proper right now. Does that mean that they would actually benefit then from perhaps closing down some of those Golf Galaxy capacities and then bringing that inventory more into where customers are already going for some of the other categories as well?
That's certainly a possibility. I mean, my guess is that in a lot of cases, the Golf Galaxy, the standalone stores, are in areas where they don't have a Dick's, and maybe it's too small of a market to support a Dick's. But certainly that is something that they could do, if it made sense for them.
Loop Capital Markets Managing Director Anthony Chukumba, always good to see you, my friend. We'll talk to you soon.
Sounds good.